Hi everyone, this is Craig, the Options Linebacker. This is the weekend report for Sunday, March 6th. Let's see what's going on in the markets. We'll first start off with Dow theory, with the Dow on the left-hand side, the transports on the right-hand side. The Dow looks like it's got a very nice uptrend pattern in place. Potential lower high here, but still looks like it's just a retracement back to important support at Dow 12,000. The transports, unfortunately, are not looking so good. After printing a higher high and showing Dow theory confirmation, all of a sudden we have non-confirmation now as the transports have put in a lower low and almost certainly what's going to be a lower high. So the transports appear like they're rolling into a change of polarity or a downtrend. We can also see this broadening pattern that's showing up on the transports as things get to be a lot more unstable. Normally, this is a bearish pattern. Now, between the price of oil going up as well as the Baltic Dry Index, which is sort of a leading indicator for international shipping, plummeting, as we can see since really the beginning of 2010, it's been going straight down. So it's not hard to see why the transports are having trouble keeping up with the rest of the market. And we'll do that with a top-down analysis on the S&P 500, which to me is the most important U.S. index. Now, if we look at the S&P 500 monthly chart here, we can see that it's a wave 3 to the upside. We're not seeing a whole lot of detail on here because we're not really meant to. We're meant to look at the monthly chart and look for the larger patterns. And the larger patterns right now is just this enormous consolidation pattern that we've been in for the last 10 years and may last up to 17 years. So we may have another 7 years to go before we finally have charts break out, perhaps to the upside. Really right now the weekly chart on the S&P 500 is giving us the most information. It's giving us the best patterns because the monthly charts are just a little too slow. We can certainly see that it's in an uptrend right now, but not seeing enough detail. And in fact, the daily charts are not showing a lot of detail either. It just seems like everything's going straight up all the time with very few leading signals. But the weekly charts are really tuned into the flow of the S&P right now. The big question on the table is this weekly swing over the one that we've had since the beginning of September? Is it over at 304 points? Or do we finally expect to see that 80 to 100 point weekly pullback that's going to reset this chart? Now, as we'll show in a minute, this chart has been crying out for consolidation because it's absolutely exhausted at this level. So what we could see from here is a sideways consolidation that may take another 4 to 6 weeks to complete. That is the milder of the two possibilities. The other way for a chart to consolidate and gather energy is to do a slingshot move, and that starts off with a very bearish move to the downside, scares a lot of people to death, but there's a reason why they work so well. It's because it generates too much bearish energy at the wrong point in the chart. You know, a bear's biggest dream is to catch the top of a market and ride it all the way down. But the problem is that they're always too early, because what always will happen is if we truly do have a move to the downside that's starting, is it will not go straight down here like this. We will not see a move like this. Instead, what always happens, now we'll start off, if we are going to have a change in polarity in the weekly chart, we will start off with a nasty move down, perhaps going all the way down to 1220 or so to test support. But what will occur is a rebound will always happen, but this time it'll be different. It'll set up as a lower high. And that'll be the first warning that we may be starting to see something more insidious sneaking into the market. And these moves do take time. Look at what happened back in 2007. We started off with highs here. We had a nasty move down in the summer of 2007, and then that led to actually new highs before things started to fall apart. And we had our first lower low. Actually, the first real shot over the bow was around the first couple of weeks of January. It was actually on a market holiday when we had a 60-point day to the downside. We almost had a limit down day on an off day. That was really the first shot over the bow. You'll notice from there that lower low set up to a lower high. And is this good enough if you caught from here all the way down to here? Or do you have to actually get the very, very top? I would say most people would be satisfied with this much. Now you can see that when that lower high actually printed and set up, then everything sort of fell apart very quickly from there. Now, when we apply this towards today's price action, certainly we don't see anything all that bearish right now. We haven't had our first downdraft or first real nasty move in a long time. It's really been since almost a year before, but anything can happen. My point here is that if we do see something really dynamic, let's put it that way, to the downside in the coming months, that will only set up as a prelude to a lower high, a potential lower high. It's still too early. We are still in a primary uptrend on this weekly chart. 2 to 3 weeks ago, I talked about the fact that we had very little energy left in the weekly chart, as proved by this consolidation energy. It was actually well below 35 and had plummeted down into the mid-20s. And now we can see the result of that is that we've had 2 straight weeks of charts walking sideways. But as we look at the energy on the daily chart, it's ready to run. Now, we don't know which way it's going to move. Right now, this is setting up as a potential bear flag pattern that could lead us down to this level here, perhaps 1270, 1275, if that's the way it sets up. We don't know that though, because it's also got a higher low at this point. So we could just see it turn right around and start inching its way higher. So here's what's going to happen from here. As always, there's one of 3 possibilities that's going to work out. Now, what we could see again is we could see a very quick move lower. And what you'd find is that this would very quickly recharge this chart up to where it's ready to trend again. And we'd see that manifest through the breakdown from the bear flag on the daily chart. Now, if that's the case, the eventual outcome from that will probably be some type of a bounce back up. As to whether it hits a lower high or not, or it just keeps on continuing higher from there, we don't know at this point, and really it's too soon to care. The second thing that we might see is just a continuation of this sideways pattern, actually setting up a pennant or a symmetrical triangle pattern. And that would last anywhere from the next 4 to 6 weeks, I think, before it would finally coil up like a spring and break out. And we would see that potential by this chart raising up over 55. The third possibility, and we don't want to discount this, is that the chart just starts to leak higher, like this. Now, if it does, it's not going to do so in great jumps. It's going to just sort of inch higher every week. We'll see some volatility during the day, but on a weekly basis, it's not going to make much progress. And what this will do is eventually will, the slow way, recharge this up. It's probably going to take quite a few weeks to get there like that. But we can see that we've actually had this sort of thing in the past. When we've had this chart completely exhausted at this point, notice how these small little candles to the upside actually started to recharge this chart a little bit before it finally went parabolic and exhausted the rest of its energy. Now, unless you've been under a rock lately, you can see that the price of oil has been going up due to a few factors, not the least of which is the fact that the government continues to crush the dollar through money printing. Now, we do have an odd divergence lately, because normally when we start to crush the dollar like this, assets will just go up in price as they assume inflation. But the problem is that, as you've seen over the last couple of weeks, stocks have not gone up. And if we print so much money that the rest of the world no longer wants to use us as a reserve currency, then we've got problems. And this is why I'm going to continue to build a position in silver. I've been in since about $15, and we'll look to sell puts on that on a regular basis to accumulate additional shares at a discount. Now, how do I do that? Well, I run what I call a pyramid system. The bulk of my trades are in these non-directional index trades, also known as iron condors. So I play these every month regardless of what the market's doing. When the market goes flat, they're very easy trades. When the market starts to move, I have defensive moves that I can place to keep my risk management in check. Now, semi-directional, this is where we sell puts and do covered calls. And the market has to be in an uptrend for me to be able to do these types of trades. Now, the next level in the pyramid, and obviously with smaller portion of capital because these are riskier trades, is we look for directional index trades, also known as swing trades, and we only play these on indices. And then at the very top of the pyramid, with the smallest portion of capital, is a new strategy that we're putting together, which is weekly index options. So when you put all these together, you have a vertically integrated strategy that can trade any type of market. And I'm out of time, so good trading in the week ahead, and we'll talk to you next weekend. Take care.